the Australian dollar, Aussie dollar, $8. In general, the Australian dollar is a risk currency. Okay, so if Clinton gets closer to a win, it's good for the Aussie dollar. If Trump gets closer, it's bad for the Aussie dollar. Same thing goes with wars, natural disasters, financial crisis, you name it. Australia's #1 trade partner is China. The impact of Chinese events has waned. Okay, so we see in the past we've seen GDP, industrial output, anything coming out from China having a big impact on the Aussie dollar. Not so much. Also, figures in China have been improving. So some stabilization, some stimulus over there. It doesn't rock the boat. Worries about China's hard landing have less of an impact. Mining investment continues squeezing, but it's still a large sector, still big capacity, it's still selling a lot to China. Perhaps growth is not strong there, but it's still churning out quite well. We had a lower Australian dollar for longer. This helped other sectors, other exports. So the transition is moving quite well. And there's a new governor in the the Reserve Bank of Australia, Philip Lowe. Philip Lowe, the guy here with the glasses, he was with RBA for a very, very long time. He replaces Glenn Stevens after 10 years. In his first big appearance, he said that they will not go nuts. Okay, that's the word he used about inflation. I mean, reaching the exact target. RBA has been on a path of cutting interest rates, and this could be a signal that a long pause is expected. No rate hikes, of course, but not a cut of the interest rates. Big questions that are open. How will high dwelling prices impact policy? Okay, dwelling, the word that they like more in Australia, also the UK, I guess, for housing. So housing in Sydney is extremely expensive. How will it impact policy? If they introduce more macroprudential tools to curb the housing bubble, in theory, they can cut rates, okay? But if not, it won't happen. If Philip Lowe does not cut more rate cuts, of course, the Australian dollar could rise. Okay. In any case, the Aussie dollar could be limited by a Fed rate hike in December, which is very much on the cards. All in all, we could see a bit more gains for the Australian dollar. So Philip Lowe, not Aussie Lowe. All right. Specifically, he makes his first decision next week. Before that, these are the big events coming up in Australia. Report on Friday. When I say Friday, it's the night between Thursday and Friday here in Europe. Private sector credit also on Friday. Also sort of forward-looking index, the Caixin manufacturing PMI that we mentioned before. Again, China has less of an impact on Australia. And well, during the weekend, while markets are closed, we have the official Chinese PMI from the government, a bit less important, and when markets are closed, but it could impact the open. A gauge of inflation. Inflation in Australia is released only once per quarter, so this independent measure, the Melbourne Institute inflation gauge, provides more insight. On Tuesday, it's a big night or morning in Australia, building approvals. And then the rate decision, the first rate decision for Lowe. No changes expected in rates. The big thing is, will he make his mark already on the first statement? Will he make changes in the statement? Will it be more hawkish? Will he signal no rate cuts in the near future? This remains, of course, an open question. Okay.